Hello everyone, this is Amit Kumar Gupta from Department of Commerce, Don Bosco College, Elegiri Hill. Today I am going to take a video lesson on a topic, valuation of goodwill, which comes under corporate accounting. So first of all, let us know the meaning of goodwill. So goodwill is an intangible assets that represent the reputations, brand's value, customer loyalty and other physical assets that contributes to the overall value of a business. So goodwill is an intangible asset. Intangible asset means which we cannot see, feel or touch, but it represents the reputation, brand, value and customer loyalty and other physical assets that contribute to the overall value of business. So in simple term, the meaning of goodwill is it represents the value and the brand, how the business has been functioning, whether the value of the business is good or bad. With the help of goodwill we can understand. So under valuation of goodwill there are different methods. So there are three methods. First of all, the first method of valuation of goodwill is average profit methods. So the formula for average profit method is average profit into number of year purchase, and then under that we need to know the formula of average profit as well. So the formula of average profit is total profit for the chosen period divided by number of years. So let us go solve one sum with the help of this formula. Okay, before that, the second method for valuation of goodwill is super profit method. So under this we need to know three formulas. The first one is goodwill formula, that is super profit into number of year purchase. The second formula which we should know under super profit method is average expected profit minus normal profit, and the third formula is normal profit. So the formula of normal profit is capital employed into normal rate of return, and the third one is capitalization method. So the formula to find the value of goodwill under capitalization method is total capitalized value at business minus net assets, and the formula of net assets is total assets minus liabilities, and total capitalized value of a firm, that will be actual profit divided by normal rate of return. So first of all we shall solve under the method of average profit method to find the value of goodwill. So here I have framed one question. So based on the question we shall find the value of goodwill under average profit method. So the question is, goodwill is to be valued at 3 years purchase for 5 years average profit. The profit for last 5 years of the firm were, for the year 1994 the profit is 2400, for the year 1995 the profit is rupees 3000, for the year 1996 the profit is rupees 3400, for the year 1997 the profit is 3200, and for the year 1998 the profit is rupees 4000, and calculate the amount of goodwill. So with the amount of profit for last 5 years we need to find the amount of goodwill under average profit method, because the question says goodwill is to be valued at 3 years purchase for 5 years average profit. So first of all, to find the value of goodwill we need to sum the profit of last 5 years. So the total profit for last 5 years is given in the equation, that is 2400 rupees for the year 1994 plus rupees 3000, that is for the year 1995, then plus 3400 for the year 1996, then 3200 rupees for the year 1997, and rupees 4000 for the year 1998. So the total of last 5 years profit is rupees 16,000. So now with the amount of 16,000 we can find the value of average profit. As we know, the formula of average profit is total profit of last 5 years divided by number of years. So the total profit for last 5 years is rupees 16,000, which will be divided by 5. So we got rupees 3200 rupees. So that is the value of average profit. Now we can apply to the formula of goodwills. So the formula of goodwills under average profit method is average profit into number of year purchase. So now with the calculation we got the value of average profit, that is rupees 3200 into 3 years. Here I have taken 3 years because in the question they said that goodwill is to be valued at 3 years purchase. So based on the formula for goodwill under average profit method is average profit into number of year purchase. So the question has been stated very clearly that goodwill has to be valued at 3 years purchase, for which I have taken 3 years. That is why I have taken average profit, that is 3200 rupees into the number of year purchase is 3 years. So when you multiply with that value, you will get rupees 9,600 rupees. So that is the value of goodwill for the last 5 years profit under average profit method. So this is how you have to calculate the value of goodwill under average profit method. So this is the calculation of goodwills under super profit method. So here also I have framed out one question, and based on the question we shall find the value of goodwill under super profit method. So under this question I have been stated that Mr. Edison has invested rupees 4,000 rupees in a business. His net profit before tax at 50% is rupees 1,60,000, out of which rupees 12,000 annual rent of own building used as business premises, and then rupees 24,000 per annum as his salaries were not deducted. For starting this business, he left a job fetching him a monthly salary of rupees 2,000 before starting this business. He had invested this amount on 10% of securities, and fair compensation for the risk involved is 2%. So the question says calculate the value of goodwill on the basis of 3 years purchase of the average annual super profit. So in the question they have stated super profit, so we need to find the value of goodwill under super profit methods. So the formula of super profit method is different from average profit method. So under super profit method we need to calculate 3 things. The first one is calculation of normal profit. So the formula of normal profit is capital employed into normal rate of return. So we should know the value of capital employed as well as we should know the normal rate of return. So in this question, capital employed, how much capital has been employed in the business? So it has been clearly stated in the first sentence of the question, that is Mr. Edison has invested rupees 4,000 in his business. So 4,000 is the amount that has been employed in a business. So that will be the value of capital employed, that is rupees 4 lakh rupees. Next, that is normal rate of return. So normal rate of return is 12%. How we got 12% means it has been stated in the question that he had invested this amount on 10% security, fair compensation for the risks involved 2%, which means 10% securities plus 2% on compensation. So 10% plus 2% is equal to 12%. So 12% is the normal rate of return. Now we can find the value of normal profit. So the formula of normal profit is capital employed. So the value of capital employed we got rupees 4 lakh into normal rate of return. So we got normal rate of return as 12%. So 4 lakh into 12 divided by 100. So we got the value of normal profit, that is rupees 48,000. So after we get the value of normal profit, the second step to find is calculation of super profit. We need to find the value of super profit. So what is the formula of super profit? As I stated in the previous slides that super profit, the formula is average expected profit minus normal profit. Now we have already calculated normal profit. So here the missing value is average expected profit. So we need to find the value of average expected profit. So now in the question it has been stated that average annual profit before tax was rupees 1,60,000. Here we need to subtract rupees 24,000 salary. Reason behind it has been stated in the question. So it has been stated in the question that 24,000 rupees per annum as his salary were not deducted. It was not deducted the amount of salary, so for which I have been deducted in the amount of profit, net profit before tax was 1,60,000 minus 24,000. So 1,60,000 minus 24,000 the amount of salary. So 1,60,000 minus 24,000 will be 1,36,000 will be the annual profit before tax. So the amount that was the profit which was before tax. So remaining 50% that has to be charged after tax. So we need to deduct less 50% of 1,36,000. So 1,36,000 into 50% will be 68,000. So now profit after tax will be 1,36,000 minus 68,000. So when you subtract that two value, you will get the amount of profit after tax, that is rupees 68,000. And we are calculating here profit after tax because in the question it has been stated clearly that the amount of profit was mentioned for before tax, not after tax, because of which we have been deducted the amount of salary, at the same time the amount of 50% tax. So for which we got the value of profit after tax, that is rupees 68,000. Now applying to the formula The formula of super profit is average expected profit. So just now we have calculated, that is 68,000 rupees. So average expected profit, we have applied 68,000 rupees minus normal profit. Now normal profit we got rupees 48,000. We got 48,000 from the previous calculation. In the back slide it has been stated. So here we have got normal profit rupees 48,000. So 68,000 minus 48,000, we got the value of super profit rupees 20,000. And the third step under super profit method is to find the value of goodwill. So the formula of goodwill under super profit method is super profit into number of year purchase. So here we got the value of super profit is rupees 20,000 into number of year purchase. It has been stated in the question that goodwill has to be valued for 3 years purchase. That is why I have multiplied with 3. So 20,000 into 3 is 60,000. And this is the third method for the calculation of goodwill under capitalization method. So here a question is, A run a chemist shop. His net asset as on 31st March 2016 amounted to rupees 20 lakhs after paying a rent of rupees 45,000 a year. He earned a profit of rupees 2,10,000. His landlord, who happens to be an expert chemist, is interested in purchasing the shop. 8% is considered to be a reasonable return on capital employed. What can A expect as payment for goodwill? So here they are telling to find the value of goodwill for A under capitalization method. So first step to find the value under capitalization method is to find the value of capitalized value at a business. So calculation of capitalized value at a business. The formula of capitalized value at business or at firm is actual profit divided by normal rate of return. So what is the actual profit in this question? In the question it has been said that his net asset as on 31st March 2016 amounted to rupees 20 lakhs. So after paying a rent of rupees 45,000 a year, and he has earned a profit of rupees 2,10,000. So that is the profit that is he has been earned. So actual profit is 2,10,000 plus rent amount has been added, that is 45,000. So the total capitalized value at firm under actual profit will be 2,55,000. Here the reason behind why I have added the rent amount rupees 45,000 is it has been stated in the question that after paying a rent of rupees 45,000 a year, he had earned a profit of rupees 2,10,000, which means 45,000 was also a part of profit, and that amount has been paid in the form of rent. So the actual profit for the business is 2,55,000, but out of that he has paid rupees 45,000 as a rent amount. That is the reason I have added rupees 45,000 to know the actual profit of the firm. So the actual profit we got 2,55,000. Now total capitalized value at a firm. So we got actual profit 2,55,000. As per the formula, actual profit is 2,55,000 divided by normal rate of return. So normal rate of return in the question they have been stated that 8% is considered as a reasonable return on capital employed. So the normal rate of return of a firm is 8%. So applying to the formula, capitalized value at a firm, the actual profit we got 2,55,000 divided by 8%, that is normal rate of return. So when you divide that value, you will get rupees 31,87,500. And the next is net asset value. It is clearly given in the question, net asset amounted to rupees 20 lakhs. In the first sentence, his net assets as on 31st March 2016 amounted to rupees 20 lakhs. So it is directly given in the question. That's why the second step to find the value of goodwill is net assets. So that is directly given in the question, rupees 20 lakhs. And the third step is to find the value of goodwill under capitalization method. So the formula is total capitalized value at business minus net assets. So total capitalized value at business, just before this slide we have calculated the value of capitalized value at business, and we got 31,87,500 rupees. So I applied that value in the formula minus net assets. So in the second step we have got 20 lakhs rupees as a net asset value. So that has to be subtracted. So 31,87,500 minus 20 lakhs, you will get rupees 11,87,500. So that will be the value of goodwill for Mr. A. So this is the three different methods to find the value of goodwill under valuation of goodwills. The first one is average profit method, the second one is super profit method, and the third one is capitalization method. So in this session I'll conclude with this on the topic valuation of goodwill. In the next session I'll be taking on the topic valuation of shares. Thank you.